Wow, 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 wow. Did we see some big moves this last weekend? First of all, let's get right into this unemployment thing. This was a shocker. Economists, including myself, were looking for closer to 20% unemployment rate, and it fell to 13.3. You can see the headline markets rally as economy adds 2.5 million jobs. And this was really a rehiring of a lot of people, particularly in places like construction in Florida, but also people in hospitality, small service sector businesses. It was pretty broad based. So this was a shocker. Now, frankly, I didn't believe the number. So I dove right into it. I analyzed and reanalyzed the Bureau of Labor Statistics reports. They actually do two surveys. I looked at both of the surveys. The only thing I can think of is, first of all, it's true. And second of all, maybe the seasonal adjustment exaggerated it. In other words, see, when they say that the economy added 2.5 million jobs, that's 2.5 million jobs seasonally adjusted. And the 13.3% unemployment rate is seasonally adjusted. It's not the raw numbers. Because, of course, there's seasonality to hiring and firing. Construction, obviously, those jobs go up a lot in the spring and go down in the fall. So there may be a seasonal adjustment wackiness caused by the change in pattern by COVID. So we'll take it as good news, but it's really not true. All right. Hey, everybody. Courtney Smith here. Welcome to our Wall Street Winners for June the 8th. We're racking up the big bucks. That's a great thing. And, of course, we're racking up disclaimers every week. All right. S&P, everything just took off. And there's a lot of bullish indicators in here suggesting that this bull market is going to continue. I've really only got one indicator that suggests that it's going to peak. And, I use the weight. The weight. What's the weight? It's never always bullish and always bearish. So we have to weigh the various elements. But here you can see on Friday, gap up. We opened on the low. We closed in the top half of the range. Propel predictor skyrocketing over the last month. And you can see volume was pretty high on this gap up. It didn't quite get as high as the panic that we saw in the COVID crash, but nonetheless, it was very high. High volume confirms the break out to the upside. So this is bullish. Dow Jones gaps up. This is the one factor that makes me nervous. Look at the green line showing the buying pressure and the red line showing the selling pressure. These are the buying pressure is up at a level that's the highest we've seen in the last year. That's unsustainable. In other words, everybody who wanted to buy has bought. So you're not going to see the market continue to explode at this level. We're going to start to see it chop, chop, chop. Not necessarily come down, but that buying pressure, we're going to run out of buying pressure, and we got to see some selling pressure. Maybe some people taking some quick profits on the breakout that occurred in the last couple of weeks. So this is the only negative thing that's popped up this week. NASDAQ breaks, whoa, look, almost to new all-time highs there. Look at that, unbelievable. And look at the volume, even higher volume than the COVID crash volume. That's once again confirming the strength in the market. Seasonality. We're still since we're in the neutral period, we still have to say that the stock market, we have to rank it as neutral. But down at the bottom, utilities, bullish right now and breaking out to new highs. So definitely fully paid up members or long utility stocks. All you people who aren't fully paid up members, come on, get with the program. Sign up. You'll start making money on utility stocks like we are. Okay. Seasonality is bullish right now. We basically want to use the green. That's the normal one we'd want to use. Maybe the blue, but we don't want to use the red. So clearly bullish period. And really, you can see bullish into July, sideways in July, then another rally into August, then a little dip at the end of August, then a rally. Look at that. First 3 weeks, pretty good. Last week in the month, not so hot. Okay, another big change, and there's several of these. Yield curve spiked up. That's helpful to the market. That's very helpful to the market. Now, I always say that we get a big bull market when it's sharply positive, and even back in March, it wasn't sharply positive. We need to get up about 2.00. We're not even at 1.00 right now, but still, it's helpful. We're going in the right direction now. Asset allocation. Whoa, just sell those bonds. We don't want them. Dump those turkeys. Let's buy stocks. This is where a lot of that money's coming from. I showed you the green line and the red line. Why is the buying so strong? Well, people are bailing out of bonds and they're buying stocks. This insight that I'm showing you here, this is why you're watching this video, is so that you can understand where the cash is coming from to buy stocks. You need to know where it's coming from. A risk-taker says, oh my God, we've got to have more risk. They're not hunkering down. They don't want to buy safe stocks. They want to buy risky stocks. Global shares mimicking the U.S. But notice we're not even anywhere near the Feb highs. So global shares not as strong as American shares, so better to stay in America. Bonds, I told you last week they broke that rectangle formation, and I said we get down to about 150, 250. Essentially, we got there. We got to the objective that I told you that we would get to. I think we're going to head down a little bit lower now. Okay, don't think that this drop is over. We've hit our first objective. I don't have a second objective yet, but I'm working on it. Bond key factors. Up at the top, that's the price of gold. It's saying lower yields. But then we have the blue line, which is German interest rates. That's saying we're going to have higher yields. We have to have the 10-year treasuries rally quite a bit to catch up with the bond yields in Germany. Right now, they're lower than Germany, and that's a pretty rare circumstance. Also, the chart itself, the red and black lines, they're starting to rally. That's commodity prices, and commodity prices are a leading indicator of inflation. That's why it's one of our key indicators for 10-year treasuries. Dollar under a lot of pressure, mainly against the euro, not against the yen. Gold starting to crack. And you can see we just barely broke out of those lows. Fully paid up members, we bailed out of our long gold positions, as you know, earlier in the week. Thank goodness. Our gold key indicators, what a mixed bag. Top indicator, clearly bullish. Middle indicator, somewhat bullish. Bottom indicator, clearly bearish. 2-to-1 bullish, but the bottom one is the most important one, and it's bearish. Crude oil popped. I told you we were going to get up into the gap that was left in March, and there we are. Should see some consolidation at this level, but they came out and announced that they're going to extend the production cuts by one more month. So the month of July, that's helping. Also, the strong employment news on Friday led to ideas that the demand for things like gasoline and jet fuel are going to come back stronger than expected. So if we've got stronger than expected demand and we have the production cuts held, this is pretty good. We're at $40 a barrel. I can't believe we're going to get to 50. I think we're going to consolidate here. But wow, we've had quite the bullish run. Price of crude oil has quadrupled in the last 6 weeks. All right, Bitcoin did break out earlier in the week and then failed. We're now in a big consolidation zone. I want to be bullish because we did break out, but look at the purple predictor. The purple predictor is telling us that the smart money is taking profits after the rally we had. We were down at 4,000. Now we're close to 10,000. That's a big, big rally. And the smart money, as I showed you, the purple predictor led that rally. Now they're probably going to lead a drop in the price of Bitcoin. So my bullishness, not bullish anymore. In fact, let me call myself neutral. On the positive side, we did break out to the top side, although right now it's a bull trap. On the bear side, we have the smart money selling Bitcoin. All right, freebies, you know we love you. Fully paid up members, hang on just 1 second because I got a bunch of new trades. And, of course, all our existing trades are just cleaning up. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.